Over the years, as I've worked with entrepreneurs, I've been surprised to learn that they're not aware of the types of financing that are available to them or what you can finance. As I'm putting together my first online course on the art of bank financing, I thought I'd take a moment and share with you today the types of financing that are available to you and the things you can finance. So let's start with the line of credit. A line of credit is typically the loan that most business owners get. The purpose of a line is to give you needed cash flow during times when your cash flow is short. If you have a seasonal business, if you need money to buy things for your company that are more than you're generating in cash in any given month. So lines of credit can be anywhere from $50,000 to several million dollars, depending on the company. And the idea is that you'll pay that line back over the course of the year. It's a short-term loan. The next is a term loan. Now, often when I'll go for bank financing with a client, we'll look for a line of credit as well as a term loan. And a term loan is a loan 3, 5, 7 years that enables you to get the equipment or to launch a program that you want and be able to pay it back over time. It's a beautiful vehicle for you, and what makes it work so well is that you're going to get a return on investment on the money. So don't do a term loan if it's to cover monthly costs. The purpose of a term loan and the purpose for most debt should be to finance growth, to finance return on investment. Now, many times you may not have the collateral necessary to meet the bank's criteria, and that's where SBA guaranteed loans come from. 3 of the loans that I've made over the last 2 years have been SBA guaranteed loans. How that works is this: the bank likes the loan, but they don't see the collateral there, or they need additional protection. So what they'll do is they'll bring SBA in and say, we approve this loan, and if you'll guarantee it, 70 to 80% of the loan, we'll do it. In the past fiscal year alone, $29 billion worth of loans, over 55,000 loans happened because of SBA guarantees. Generally, these loans are under $3.5 million. They can be as low as $50,000 or $100,000, but don't think you can't get funding because you don't have the collateral if you can work with a bank that does work with SBA. The next thing is asset-based lending. Let's say you want to buy a forklift like one of my clients recently did, or you want to buy specific equipment. That's an asset. And the bank will look at that like they'll look at cars, like they'll look at trucks. It's good money return for the banks, and they can finance that as well. So take a look at the assets and ask for that asset-based lending. Another type of loan is refinancing. So let's say you're in a position right now where you have loans that'll be paid over the next 18 months. You have to pay them off. And as a result of it, it's draining your cash flow. Well, can you spread that out over 5 years and refinance it and reduce the monthly amount that you have to pay back? Interest rates are so low right now that this is a great opportunity to give yourself more cash flow. And it's a loan that most banks will make if historically you've been able to show you can pay your loans back. Here's something you may not consider: seed capital. You want to open up a new division, or you want to open up in China or another country, and you need the seed capital to make it happen. If in fact you can show that you've had a pilot program in place, that you have purchase orders, that you have contracts in place, and you need the capital to get it set up, that's a loan that a bank will consider if you present it right. And another area that banks will finance is helping you acquire a company. Why? Because what they're going to finance are the assets, the hard assets of the company. One company I worked with grew by acquisition, and over the course of 10 years, they acquired 15 companies in their industry. And in doing this, they got the seller to pay a third down and the bank to take a third down, and the bank to finance the rest based upon assets. And they were able to build an empire and gain market share with that. The bank trusted them, they saw that it worked, they did it one at a time, and then they grew to the point where they had created a marvelous relationship with the bank, and they grew an empire which they sold for a small fortune. Finally, I want you to consider safety net. Let's assume you don't have a line of credit or any bank loan. Let's assume you were able to cover things with the capital you have. There's an old saying about banks that they will lend you an umbrella when the sun is shining and take it away when it's raining. If the sun is shining, maybe now's the time to establish a lending relationship with the bank. They'll be comfortable lending to you, and as a result, if and when you need the capital, it doesn't have to come out of your capital, and you can take money off the table and save it for yourself. So equipment is financeable, refinancing, consolidations, all sorts of things that you can finance if you're creative. So keep that in mind as you look to what do you need to get to where you want to go in 2017 and 2018. Any questions? Contact me and I'll be happy to help you. Hope this has been food for thought for you. Have a great day.